Should you buy a home now or should you wait? Are prices going to drop? What if you're buying at the wrong time? These are the biggest questions everyone's asking, and we tend to spend so much time worrying about the risk of buying, but what's the cost of waiting? In this video, we're going to break down the 5 biggest costs of waiting, and I guarantee that you'll be surprised how significant these costs can be. So let's get right into it. Cost number 1 is simple. While you wait, home prices are typically rising. Let's use a $500,000 home as our example. Historically, over the long term, prices appreciate by about 4% per year, which means the same house you can buy this year for $500,000 will cost $520,000 next year. That's an extra $20,000 you have to pay by waiting just 1 year. And think about the down payment. A 20% down payment on that home today is $100,000. Next year, it's $104,000. So you have to save an extra $4,000 just to have the same down payment on the same house by waiting a year. So you're essentially paying more for the same exact house just because you waited. The second cost is the one that usually stings. It's called the cost of paying your landlord's mortgage. So if your rent is say $2,000 a month, that's $24,000 this year that you're paying to someone else. It's building their net worth, not yours. You get zero of that back. When you're a homeowner, a portion of your monthly payment is principal. It pays down your loan. On a $400,000 loan at a 6.5% interest rate, you would pay down about $4,400 of your loan balance in the very first year. That's $4,400 in forced savings that goes directly to your net worth, all while you're just living in the house. So it's a double whammy. That's a technical term. You're not just losing out on paying down your loan, you're also losing out on the $20,000 of appreciation we just talked about. Homeowners build wealth from 2 directions while renters get 0. Now for cost number 3, let's look at the cost of inflation. Historically, homes keep up with inflation, but savings accounts don't. That means that any savings you have in the bank is likely earning an interest rate lower than inflation. This means you're actually losing buying power. This is because the government prints money, which reduces the value of the existing money supply. So when you see the cost of goods around you going up, it's not that they're getting more expensive, it's that your dollars are worth less. Inflation is a silent tax on savers, and if you don't own hard assets like real estate, you will be falling behind. Now, on top of building equity and owning an asset that will keep up with inflation, cost number 4 is your lost tax benefits. While you're renting, you're missing out on significant tax deductions. As a renter, your rent payment is not tax deductible. This means that you're using after-tax dollars to pay your rent. But as a homeowner, you can deduct the mortgage interest you pay and reduce your taxable income. And in the beginning years, your mortgage payment is mostly interest, so you can deduct a larger amount. Besides deducting your mortgage interest, you can also deduct property taxes. These 2 deductions can make a big difference, giving you a larger tax refund or a smaller tax bill at the end of the year. You're leaving these tax savings on the table every year as a renter. Currently, you can deduct your mortgage interest expense on up to $750,000 of principal and up to $40,000 in property taxes, and you benefit if all of your itemized deductions exceed your standard deduction. Finally, let's move on to cost number 5. This cost doesn't show up on a spreadsheet, but it may be the biggest cost of all, the human cost. When you rent, you have to ask permission for things like painting a wall, or you have to comply with pet policy restrictions. You can't build a nursery for a new baby, or plant a garden, or just feel like your home is truly 100% yours. At any lease renewal, the landlord can decide not to renew the lease, forcing you to move. Market rents can increase dramatically, forcing you to move because you can't afford it. This is the cost of not putting down roots. It's hard to put a dollar amount on the human cost, but for many people, this is the highest cost of all. So let's recap. There isn't just one cost of waiting. The costs are higher prices, lost equity, devaluation of your savings, missed tax benefits, and the very real cost of putting your life on hold. Waiting for the perfect moment has very real risks. The best time to buy is when you're financially ready and it's right for your life. Tell me what you think in the comments below, and if you're ready to stop waiting and see what your first step actually looks like, check out my video on the 10 steps to boost your credit score and save big on your mortgage. And if you're on your home buying journey, be sure to subscribe so you don't miss future videos released every Friday. Thank you so much for watching, and I'll see you in the next one.